All right. Let's start with ES. So what I have been seeing is that you see this fib retracements. It came to exactly. So what was the low? 3807 and 3801 or 3802 was the fib retracement for the 38% retracement from COVID low to recent high. That's obviously a very big one. Of course, we know that NASDAQ was even worse, but this one tested the 50% retracement. Look at that. 11,700, 698, whatever. So there is, I mean, and look at how bad this move was. I mean, 15,260 to 11. I mean, that's a very big move. I mean, it does make sense for a bounce for it to happen. And I was looking at previous corrections. They used to, I mean, in those corrections, the bear market rallies used to be, there is a good possibility this could go all the way to 13,800. That's how those rallies were. Really big one and then go down again 20% or 21%. I mean, it will probably bounce 10-15% higher and then it will probably go down another 20-25%. You know, that's how the rallies and corrections have been. Anyway, talking about the bottoming process, generally bottoming, right? I mean, it generally takes a while, and this one looks much similar to this one. It retested, undercut that low, and then it went up, right? I mean, this time it did actually undercut the low already, but the difference or the number of days between this one and this one was much less. Here it was 1, 2, 3, 4, 5, 6, 7, 8 days. Here it's 1, 2, 3, 4, 5, 6 days. Well, I mean, more or less. But the important thing here is it's not going down anymore. So there could be lack of sellers. Generally, institutions don't like to sell while it's going down every day. They would wait for a bounce and then sell into it. They have a much higher time or larger time frame than what we have. So, and in the last few days, when this was broken down, I was expecting this to go. So this is also very important in technical analysis. When a low is tested and breached, if the distance between these two candles is less, there is a higher probability that this is going to go lower. But obviously, it's not going lower. So that's an important metric that I'm considering right now. And this could be similar. So if it breaks above this trend line, that's when we know that the uptrend, this looks, yeah, that this uptrend, I mean, the downtrend is broken. It's too much. Let me try this one. So on this day, and also on this day, right, you have a higher high. So I know we always talk about this, but so that's a high, that's a lower high, that's a lower low. No, that's a low. That's a lower low when compared to this. And here we have a lower low. This is undercut this low, but by not much. The same as here. It did undercut, but it closed higher. So when compared to this one, this is a lower high, and this is a lower high. And when it broke this one, now right here, that's a higher high. So that's what we will be looking right here. And as I said, these retracements are very, very important, and everybody's watching these retracements. And if it breaks, we'll definitely know. If this breaks, we will start to see everything else, getting decimated, all the tech stocks. And the other thing is what I've been saying is, on a very, very, very bad news, market doesn't go lower. That's exactly what happened today. We have seen Google go down 8% at one point, and NASDAQ was down what, 3% at some point. So, and look at where it closed. It actually closed higher than the open. So there is something in the studies that's called, I think it's daily open or something. Yeah, that's the one. It says right here, daily open. You can add it. I think it's Thinkorswim gives that to us. It's basically drawing a small line at the open. So it opened right here, came down and closed above that open. That's an important metric. I mean, it's the same case with almost all the stocks or even indices. That's not a bearish day. Whenever the close is higher than the open, that's not a bearish day. And I mean, I don't know what's going to happen to this one. I mean, where the next move is for this one. But as I said, when you have such a bad news, it's still open. It's still closed above the open. So that's a bullish scenario.
It's also a dragonfly doji, right? From a candle pattern perspective, it's a bullish sign, right? Bullish reversal.
Yep.
So, KP, when you say bad news, right? Are you saying like Snap and also like the home sales?
No, just the Snap. I mean, I'm just talking about the tech stocks. What happened today? Home sales is something to be expected, I guess. I mean, I did not post it here, but yeah, I saw the some of the home sales from one of the Twitter guys, and
the April month expected.
Yeah, that is to be expected when the high. I mean, it's who is going to buy a house if the interest rates are 2% higher than the last year? It wouldn't make any sense for anybody. I mean, people are not able to qualify anymore.
Yeah.
So some people in the group have been asking about how or when they should be buying, their favorite stocks. And then this is something I wanted to cover. So this is NVIDIA in 2018. I mean, NVIDIA has been an amazing run in 2018 because of all the mining and everything in Bitcoin. This is where it was. Look at how, when compared to this one doesn't look much, but let me open this up. Yeah, that's a move from $6 to $70. That's almost 1,000% move, right? In like what, 2 years, a little over 2 years. But when this came down, it took 2018, almost more than a year for this to, recover. So most of these stocks that we are looking at, even Google or even Tesla, I know nobody believes that Tesla is going to take, everybody believes that Tesla is going to come back up really strong. Anything that goes down 50%, it's going to take a while for it to recover, because you have so much of supply above you, and we don't even know if this is done yet. I was talking to a friend and he was asking, and the funny thing is, people ask me whether they should buy, but most of the time they have already bought it. They want some kind of confirmation saying that, whether they have done the right thing or not anyway. So this 546 is a bigger level, which I think it's gonna test. And if that breaks, it could go all the way down to 350. And I want to show you something else too.
KP, when you look at these levels, right, would you ever get tempted to enter this position, maybe if it hits 329, irrespective of what the candle says or the market? Would you choose to enter at some point?
I never did so far. I never did.
Okay.
Well, truthfully, when do we know that the stock is turning around? Is when we have that higher high. We get a higher low and a higher high. There is none so far. I mean, here there was, that's a higher high, but right now there is no higher high. And we don't know how bad this is going to get. The thing is, it's better to look for a setup that if you play 1,000 times, or if you buy 1,000 times, yeah, you have an advantage.
Yeah.
And then truthfully today, I was thinking about this. I mean, when one of my friend asked him, I told him 620 is if he really wanted to own Tesla for the long run, I was telling him buy 25% here, buy 25% here at 550, which is where, if the market turns around, could be the bigger bounce, because it bounced here, it bounced here. So, and probably 50% at here. So that would be 100% move. I mean, even if it turns around and moves higher, you still have some position and you're going to be okay. But right now, yeah, unless we get a higher low, I think there are a lot of problems with Tesla right now. Number one is, I hear Boyd is doing better than Tesla. I don't know why. The second one is, they have a bunch of Bitcoins, right? And that thing is getting killed. I mean, they are already underwater. I think he started at around 30,000 or 33,000, some 30,000 plus is where Tesla bought the Bitcoins. So that's underwater. And that's all. If this thing, there is a higher probability, this will probably go to 20,000 and next is 13,000. I mean, if it goes all the way there, I mean, they have lost a lot of money. I think they have over a $1.5 billion worth of Bitcoin, I think. So that could also be playing, we don't know what else are the reasons for, Tesla to get decimated like that. It could just be the market, who knows. And another thing is, the third thing that I'm saying, I know is that it's taking, for Model X, they're taking almost 2 years to deliver now. So their deliveries might be less this time around. We'll see.
Is it also the Twitter deal that is impacting the stock price?
It could be, but I mean, he raised enough money, and
he sold it too, right? Yeah.
Yes, and when he's on this day, when it went down a lot, I was thinking he might have sold more. Anytime he sold anything, here and here and here, it's, I mean, those candles, I mean, you can figure out which dates he sold, because anytime he sells, it's down 10% at least. So
which one was the first one? You said like some doing better than Tesla.
Boy, hold on. BYDFF, is it? No, hold on. BYDDF, this one, I think. Warren Buffett invested in this one. Same company, they make electric cars and everything. So
it's a Chinese one, right? It's
yes,
same as NIO, but
Warren
Buffett chose to invest in Boyd.
Yeah, but these guys are doing better than NIO and everybody else. I mean, in terms of the stock, right?
Oh, the Buffett has invested in this?
Yep.
I was reading their reports about 3 months ago. They were having better delivery numbers than NIO.
Yep, that's right. Again, we don't have to read anything. We can just look at this one and say, this is better than Tesla. Let everybody else read it, and we can. Oh yeah, I wanted to share. Hold on.
The stock appears to have too many gaps, right? A lot of gaps in this.
That could also be because of it being a ADR. Is it not an ADR? It is an ADR.
It's an ADR.
Yeah, I mean, ADRs, I mean, that's common in any ADR.
But NIO is a lot more smoother.
Yeah, true. So I was trying to figure out how to do the shorting, and there is something, can you guys see the trading view?
We do.
So the invert scale, this is actually how Tesla is right now. ARC. Let's see, let's look at Tesla. Okay. So there is something called invert scale. And this is probably an easier way for me to figure out when to get in and when to get out. I don't know if you guys, I mean, I have been long for a long time. I mean, most of my career I have been long. So I think looking at a chart like this gives me a much better picture. Every time it breaks out, you short. So,
that's an interesting view. Seriously.
well, this makes more sense to me. I mean, look at that. That
Our
thing looks
minds
like
are so trained, right, to look.
yeah. I would have bought it right here, or at least here,
Yeah.
if this was a stock. So now you can short right here, or and figure out when to get out. So this one I saw, and this one was interesting.
But from the looks of it, it's time to go long.
Yeah, that's how it. Yeah, that's how it does. So I don't know if I spoke about this one, the anchored VWAP. I think I did last time. So if you look at Tesla, it just hit. That's the June 2020 lows, and I think I got rid of that. There were too many lines, and let me check this one. I think this one comes to around 520, or is it 330? That comes to around 370. I have been playing with this in the last 2-3 weeks. They work really well. It's really surprising how well they work. I mean, check it out and you'll know how powerful they are. However, I don't know how to. This is the same problem that we were just talking about. Buying it, right there at 620 or whatever is hard. But in many instances, let me open up my other stocks. But one of the reasons I was looking into this one is to figure out the shorts, when to go short, So I think Carvana is one of them, I think. So that's the low of the day, or low of this downtrend. So whenever it goes below, I mean, Brian Shannon, I don't know if you guys know this guy or not, but I mean, I've been following him for a long time. And in one of the videos, he was saying this is probably one of the easiest way to go short. You buy this, when it breaks this level, that's the, let me go to 30 minutes. So let me try this again. I don't know if I put it in the 30 minutes or the daily, but I can do the 30 minutes. And anytime it goes below that, well, I mean, in any trade, right? The only thing we need to know is when we would be wrong. That's how you manage your risk. So you could either, well, of course, I'm going to do more of this as we trade. So you could probably go below that or below this, but what you would know during this, if you're following the VWAP, is that as soon as this one broke the lows or broke below this line, that all the average guy who bought into this one is wrong already. So what that says is, when these guys are wrong, they are the ones who are bailing out. And for us, if it breaks above that, you get out. That's it. I think this, when he was saying, I mean, I have problems shorting. I mean, you guys should know this by now. I'm not really good at shorting because I've never shorted before. But I mean, this year would have been an amazing year if if I was good at shorting, obviously. So this anchored VWAP seems to be a good one to master. This is another tool in the toolbox, but sometimes some tools really work for us, and we we end up mastering it.
Isn't this the same thing you mentioned, that the average buyer of 2020 bottom?
Yep.
On a SPY, you were mentioning the same thing, right?
Yep.
They're at break even right now.
They see trading. I mean, I used to have a study. I used to have a study, and where I used to hold on. Do I have it here? So I mean, it was some code. Okay, it was some code right here. Now I don't need it, obviously. So now TradingView added this one right here. So this made it so much easier. But if you look at this one, right? Of course, in hindsight, this makes so much sense or easier, and we know that. And when I first saw Carvana in Thinkorswim, for me there was only a couple of places where I would have gotten short, and actually I did get short once, but I didn't stay long. I mean, I keep looking at this one, this move, and when it broke this one, I think I was short here. Okay, and then when it started moving higher, I got out. But even here, if you would go short right here or below this day, which is around 116, you would be thinking it came from 380 to 116. But look at that, 116 to 26 today. I mean, yeah, I'm sure this is hard to expect, but that's the thing about not using your mind and letting the price dictate what you do. I mean, it came to that 50-day moving average and started breaking down, and look at where it is right now. I think these guys, the founders, lost like $8.5 billion or so. Anyways, so I'm just showing you what I'm doing on a regular basis, trying to figure out how to add more tools and make a few improvements to our trading. Okay, any questions on this one? I can go back to the VWAP.
Have you ever considered the volume profile tool, KP? Because some people trade on volume profile.
Yeah, I did, but that was a long time ago. I did not like. I mean, it did not make a lot of sense to me. Yes. But if you are using the market profile, I think that's good enough. I think, but again, for me, the best one that I could sink into is the price action, and price action works. But again, price action is something you watch a stock or you watch an index for 6 months. All you do is watch it, draw lines, and you will master it. And it is something that, I mean, master means, you will learn a lot from it. But and as I was saying, it was NQ, right? So as I was saying, when you go through this period, right, you will see what's happening on a regular day. I mean, even now, I was short here and shorts did not work. The next day it went up. Today we had technically we should have had a candle like this, or even this one. That's how bad it is supposed to be when you are seeing Google go down 8%, Apple go down 3 or 4%, Amazon go down 4 or 5%, Tesla go down 7%. I mean, those are the big huge mega caps, right? So when they go down, you should be seeing this go down a lot more than this, which it did not happen. I mean, you look at this one and you cannot say that all the growth stocks got killed today. And when I sent you that picture, I mean, this one and this one, this candle does not represent this move at all. Look at that. I mean, that's horrible. And these are really big companies. Snap is a big company. Trade Desk is a big company. I mean, but anyway, my point is, when you go through, or when you are watching the candle every day in and out, you watch it for 6 months, you will get a very good idea of what's happening, and you will start to make the trades based on those candles and nothing else. All right, let's. But the thing is, I think I might have mentioned this before. I used to know this guy. He trades only based on this RSI. That's it. I mean, he uses 1 minute, 5 minute, 15 minute, 30 minutes, 1 hour, and 4 hours. He only watches RSI, nothing else. Nothing else. And then he's an amazing trader because he has mastered it. I mean, I followed him for a while. This was way too early in my career, probably 2013 or so, I think. And it was, for him, it makes so much sense, but it did not make a lot of sense for me. So I couldn't trade based on that.
This is Shannon, right? Brian Shannon.
No. This guy, I can't even remember this guy's name. Art, I think, Art's Charts or something. Yeah, he used to write a blog before, and he stopped that blog. Maybe he went to work with somebody. I don't know what happened. But after that, I stopped following him. And at that time, there was no Twitter or whatever, right? So, yeah, for watching these candles form and figuring out what's happening during this time, and anytime you have these rounded bottoms. This is not really a rounded bottom, but this is a double bottom, right? So while it's coming down, there are more sellers, and the sellers are getting depleted. That's one of the reasons why it couldn't move lower. The same thing here. I mean, even after such a bad news, the reason it's unable to go lower is because there are no sellers here. And if it goes higher, as I was saying, if it goes all the way to 1350 or even higher, but it cannot go above this one. So somewhere in between. We could also retracement. So see the I mean, this is always surprising to me. See how that 61% retracement coincides with that 13,007. This number, as if computers are the only ones doing these trades. It's perfect. So this could go all the way to 13,821 and starts. We might have another leg down. So, and I wouldn't worry about where it's gonna go next. I mean, if this is the end of the correction, I just want to be part of it. And if it goes over there and if it makes a higher low and starts moving higher, we will see that kind of pattern in all the stocks that, all the tech stocks. So this is one of the reasons I'm always in the market figuring out which ones are doing better and how you can be part of the trend, or else you could miss the trend. And what happens is, I mean, this happened many times. I think in 2000, tech stocks bottomed almost a year before the S&P or NASDAQ bottomed. And in 2008, tech stocks bottomed in November and S&P bottomed in March. And then if you are not part of, or if you are not getting into those leaders in November or late November, early December, by the time S&P bottomed, those things went up almost 70, 80, up to 100%. So anyways, yeah, we have a long weekend next Monday, I think. So we could probably sell a lot of premium, but looks like some of the members have a problem with the ratio spreads and everything. So based on I mean, that's what I did today in one of the long-term portfolios is I just sold premium for 320. That's where you have the, well, I think I did 330, 325 ratio spread, and the average price would be somewhere below the 320 level. So that's the 61% retracement. So it's only 24 days away. I really don't think it's going to come here. Even if it comes crashing here, if I can buy it at 320, that would be an amazing buy. But anyway, I mean, you could probably sell just 320 puts right away if you don't want to get into ratio spreads. Not very far, probably, less than a month or so. I think I sold like 24 days from today. And during these long weekends, those premiums deplete really, really fast. So I mean, any time there is a long weekend, that is something that I'm continuously looking for to sell the premium. All right, what else we have? Let me go to. So I was looking at the percentage of correction so far this year. Okay. So S&P is down 19.9% at the lows. And right now it's around 17 or 18% right now correction. So what if this is a question we should always ask. What if there is no recession right now? And if we get a bounce and if we get a recession next year or something like this, what if market does this, and then it goes down? So if that's, and many, even 2018, actually this is 2018, right? So market went down exactly, it's a little bit less than 20% and it bounced. If that's the case, then we could get a bounce from here. Again, everybody's predicting recession. Recessions never happen that way. If everybody predicts something, that does not happen at all. So this, I mean, if it is not a recession, this could be the end of the correction. That's always on the back of my mind, seeing that what if my thinking is totally wrong, or what if everybody in the market is wrong? If everybody in the market is wrong, we could probably have a, probably move all the way up to here, 470, 480. That's a possibility too. Right now, all the market needs is to Fed come out and say that we are thinking of pausing, until we get a better data, or pausing the interest rates. And right now they are planning to increase the interest rates until September, right? So I'm assuming that's going to happen. But based on what we are hearing from Snap, Walmart, Target, things could change. So if there is any change, and if the Fed says that they are not going to increase any interest rates, market will move up really, really fast. So that is something to keep on the back of my mind. So basically, we are not in still a bear market for SPY. And something else was interesting. This is down 30%. IWM is also only down 30%. But I thought IWM was down more, but obviously, tech is down as much as IWM. So I guess that's all I have today. So, yeah, go ahead.
Yeah, KP, you said that if this is the bottom and if it bounces,
yep,
there has to be like you said, there has to be a catalyst, right? For
Fed. Right now it's just Fed.
Yeah, just Fed. So Fed has to say not increasing the rates, as you said.
Or they have to say that we are going to do another 2 rates and pause. That's all they have to say. And even if that's 3 months or 4 months away from now, we will start to see the long-term interest rates, which is the bonds, the 30-year bonds and everything, we will start to see. I mean, this is bouncing right now, but yeah, this will start to bounce. If this starts to bounce, the 30-year yields will start to move lower. And if that happens, the growth stocks will start to move higher.
Yeah. So, the Fed, right? So, Pavel, can you say only in the FOMC meeting, or can you say in any Fed meeting? Because the next meeting is, I think, June or July, right?
Yes, I mean, he has been talking on a regular basis.
Okay,
I think he spoke today too, right? I don't know what happened today. I did not hear anything. Market did not react much. So, yeah,
so he can make that statement in any meetings.
Oh yeah. I mean, there are instances where they have increased the rates by 1%. I think this was in 1970s, by almost 1% in between the meetings. It's an emergency meeting, and they increased it. So I mean, they will do whatever is necessary to cut down the inflation. If the inflation goes out of hand, I mean, they are going to be in big trouble. I mean, there won't be any credit. One of the reasons market is selling off so much is because they will do whatever it takes to reduce the inflation. I mean, they wouldn't care how low the markets go right now. If they lose the credibility of the price stability, they have only two mandates, right? Price stability and the unemployment. Unemployment is pretty good right now. I mean, it's 3.6 right now, which is very, very, very low. So
when it's a price stability, inflation rate, right?
Yeah. And we know how bad it is right now. So, well, I think there has been an uptick in initial claims. So that's the number of people applying for unemployment benefits for the first time. If that starts to creep up, that's a good sign, because people are actually losing jobs. I mean, not for the economy, but not for the people, but for the market. Yes, that's a good sign. Companies should stop hiring. We are hearing that, right? I mean, a lot of companies have already stopped hiring people. If your stock is going down 20, 30, 40%, who is going to hire? There's no money to hire. And I hear a lot of, I have a bunch of friends in Amazon, and they are all quitting Amazon right now because most of their income they have a base salary, plus if you are working there for more than 4 years, all you have is stock, and that stock is down 40%, and they just wants to get out. That's how it is right now. So think about all those employees who have most of their compensation in stocks. They would want to go to a place where there is more salary than stocks. Anyway, I guess that's it. That's all I have today. Let me know if you have any questions or any tickers that you guys want me to look at. Let me see if there is any.